Once again, thanks for joining us. I'm Holly and you're watching Kalkine TV live from Sydney. Welcome to the Sectoral Pulse by Kalkine TV, a special show covering all the sectoral movements from the markets for the day. The Australian share market is trading higher, driven by modest gains in mining, banking and technology sectors, although losses in energy stocks following an overnight drop in crude prices capped the gains. The S&P ASX 200 index rose 0.5% to 7,033.2 after shedding about 1% in the previous two sessions. Among other markets, Asian stocks rose today, extending a rebound in global markets following a sharp sell-off earlier this week, while oil prices eased again on the worries about rising COVID-19 cases in some parts of the world. Japan led the gains, with Nikkei rallying 1.7% after sliding 2% in each of the last two sessions. And on Wall Street, the S&P 500 rose 0.9%, reversing 2 days of declines to finish Wednesday's session just 12 points below its record close. The tech-heavy Nasdaq added 1.2%, outshining the S&P 500 in percentage gain shortly before the closing bell. Across the Tasman Sea, New Zealand's benchmark S&P NZX 50 index rose 0.36% to 12,579.9, rebounding from 2 consecutive days of losses. And now moving on to the important sectoral movements. In Australia, the top gainers were royalty investment firm Deterra Royalties, up 6.34%, and nickel gold miner IGO, which rose about 3%. Technology stocks were the top percentage gainers, advancing as much as 1.1%. And data analyst firm Nuix added 1.9%, while Megaport gained 1.3%. And financials rose 0.6%, with all of the big four lenders advancing between 0.4% and 0.8%. Meanwhile, miners were up 0.7%, helped by BHP Group and Rio Tinto, which added about 0.9% each. Energy stocks declined by 2%, with Oil Search and Woodside Petroleum shedding about 2.5% each, as oil prices fell to their lowest in a week. Overnight, Australia's top independent gas producer, Woodside, saw its March quarter production dip slightly from a year earlier, even as an 8% rise in sales volume led to a jump in sales revenue. Meanwhile, AGL Energy hit a record low after its chief executive officer resigned, just less than a month after the power producer announced its plans to split its business into two. The top percentage gainers were Fisher & Paykel Healthcare and Synlait Milk, up as much as 2% each. Australian gold sub-index jumped as much as 2.7%, set to hit its highest since January 27. And Aussie gold stocks track billion prices that rose to a near 8-week high on Thursday, as weaker US dollar and treasury yields boosted safe haven's asset appeal. And index heavyweight Newcrest Mining climbed as much as 2.1% to hit its highest since November 18th, 2020. And Northern Star Resources rose 5.8%, and Chalice Mining soared 6.7%. Australian gold stocks down 2.6% this year as of last close. Now let's look at some important currency market updates. The dollar was pinned near multi-week lows against most major currencies, as fading gains in US Treasury yields reduced the greenback's interest rate advantage. The euro was in focus ahead of a European Central Bank meeting earlier today, where any positive comments about the economic outlook or hints of tapering bond purchases are expected to send the common currency racing higher. And the dollar stood at 107.99 yen, close to a 7-week low. The euro was quoted at 1,243, not far from its strongest since March 3rd. The onshore yuan rose to 6.4828 per dollar to reach its strongest level since March 12th. And on Wednesday, a closely watched auction of US 20-year treasuries drew strong demand, which helped fixed income market regain its composure and put a cap on yields. Last month, Treasury yields spiked to their highest in more than a year due to worries about accelerating inflation, which prompted dollar bulls to pile into the currency. However, this trade has started to unwind this month as yields reversed course, and investors will now look to the US Federal Reserve's meeting next week for new trading cues. The Canadian dollar, which surged to a 6-week high on Wednesday, was last quoted at 1.2500 against its US counterpart. The Australian and New Zealand dollars traded near 1-month highs against the greenback, supported by speculation that their central banks are more likely to follow Canada's example due to an improving economic outlook. And now let's glance at some of the important commodity market updates. First up, we have Palladium, which surged to record highs on ongoing supply disruptions and the precious metals recovery. The metal surged to record high levels of 2.891 US an ounce and trades at 2,877 an ounce. The metal was strengthened by the recovery in precious metals, especially gold, which gained more than 1% on Wednesday. The metal is widely used in catalytic converters that are critical to the modern automobile to ensure cleaner exhaust fumes. Palladium demand has been strong in recent months for both automotive and industrial applications. In February, Nornickel, the largest producer of palladium in the world, had partly halted operations at 2 of its mines. Meanwhile, crude oil continued to slide down for a second day on rising inflation rates in India and the unexpectedly rising US crude oil stocks. WTI and Brent crude oil benchmark futures fell over 2% on Wednesday. The price of the futures contract Brent crude oil benchmark, expiring on April 30, traded flat at $65.05 a barrel, while the WTI crude oil futures traded 0.51% down from 64.49 cents a barrel. India continued to register a new record high, breaking infections, raising critical questions on demand in India. New lockdown restrictions have already been imposed in that part of the country. As per the latest media reports, numerous attacks on Iranian soil were made on the heavily secured locations. The Iranian intelligence agencies have blamed Israel for the attacks. These attacks complex the geopolitical condition in the Middle East region and may pose a risk to the crude oil supply if such incidents continue in the near term. And now here are the news that matters. A series of new international technology partnerships are set to make low-emissions technologies cheaper and drive investment in Australian-based projects that create jobs. A new $565.8 million commitment by the Morrison government in the 2021 to 22 budget will help create up to 2,500 jobs by backing low-emissions international technology partnerships and initiatives by co-funding research and demonstration projects. The partnership will leverage $3 to $5 of co-investment for every dollar invested in Australia, is in discussion with potential partners that will build on our already strong relationships. Prime Minister Scott Morrison said technology partnerships were key to the world finding the solutions to the world's climate challenges and creating new jobs and protecting the jobs in heavy industries and regional areas. The Prime Minister said these partnerships mean Australia will keep leading the way in low emissions technology. That also means more jobs here at home. The world is changing and we want to stay ahead of the curve by working with international partners to protect the jobs we have in energy-reliant businesses. and create new jobs in low emissions technology sectors. The Minister for Energy and Emissions Reduction, Angus Taylor, said the world looked to Australia as a leader in new and emerging energy technologies. And today's announcement will advance and support the goals of the Technology Investment Roadmap and facilitate deployment and export of homegrown low-emissions technologies and energy. Australia is ready, collaborating with trading and strategic partners, including Germany, Japan, Korea, Singapore, the UK and the US. This year, ahead of COP26, the government will ramp up that collaboration. Australia's Special Advisor on Low Emissions Technology, Dr. Alan Finkel, will play a key role in brokering new international partnerships. Australia's Technology Investment Roadmap is expected to guide $18 billion of government investment over the next 10 years and drive at least $70 billion of total new investment in low emission technologies in Australia by the year 2030. Well, that's all for now. Keep watching Kalkine TV as we bring you the latest news and trending market updates live from Sydney, Australia. This is Holly Shields signing off.